Virtual Tree Group, connecting people, building communities, helping clients to build multi-generational wealth through real estate.
So, what other tax-related actually items you'd like to add on? We covered a lot of things, but I'm sure that you have more to talk about.
There's always some favorite subjects that I have when it comes to taxes, things that I've kind of niched into that people are unaware of or afraid of, actually. People who haven't filed, they say, oh, I owe money and I just can't file. Well, that's not really a smart thing to do. You'll find out if you owe money when CRA sends you a letter, and they could send you a request to file, very nice. Then they follow up with a demand to file. This usually means CRA has looked on their database about what they know about you and the income slips that they have on file. And if you owe money, then they'll go chasing you. If you don't, they don't chase you. So what I've discovered is that we do a lot of multiple year tax filings, and people can get a lot of money back, not just on their income tax, but what I call the goodies, the HST and Trillium, possibly child tax benefits, and these can be thousands of dollars. So the multiple year tax filings, we can go back 10 years. After that, it's considered statute barred, unless of course you owe money. Then it's never statute barred, but you won't get any refunds. CPP and EI also have some earlier statute barred dates, 3 or 4 years, so you won't get any overpayments of those back. But so the multiple year tax filings are just a great way. Don't be afraid of CRA. Get them done and see where you stand, and take it from there. So you can do the 10 years or up to 10 years. That also follows with another favorite subject is the disability tax credit. We do a fair bit on a lot of companies advertising, but disability tax credits for people who are markedly restricted in their activities of daily living. And that usually is what they call an inordinate amount of time to walk a city block. So I'm not just talking to you, I'm talking to people that you know. It could be a parent or it could be a child. So the disability tax credit gives you what they call a non-refundable tax credit of $1,500, and well, it's more than that. That's what you can actually get back per year if you are responsible for income tax. So you do 10 years. If your doctor fills in the date on the disability tax credit form as, the disability started more than 10 years ago, we can do 10 years worth. If you've had taxable income in the past, you can get $15,000 back approximately, and a lot more because there's some other things that go along with that too. If you cannot use the disability tax credit all yourself, then it can get transferred to a parent to a parent or somebody else in the family as well.
So if the parents live with me, for example, and one of them is disabled, the credit goes to the children?
It can be transferred to a parent. Now, if they don't live with you, though, you may have to prove that you actually support them financially. And it means prove, not just say, oh, I give them some money for this or that. You're actually showing that you give them a check or deposit into their bank account. You must show that you financially support them. That's something that's not new, but CRA's enforcing it now, but it certainly can be done. So if you have a parent that is eligible and you want to claim it, they don't live with you, you can, and you show that you can financially support them. It's not just take them out for groceries. You've got to buy the groceries, because I get a lot of people that the senior has money, but they can't do things themselves. Well, unless you support them.
And is there any minimum amount of contribution?
They haven't defined that, so I haven't heard about a minimum amount, and you've got to, it should be ongoing, not just sort of once in a while, but that's just sort of my rules. But you want to be able to prove things. So it's an interesting subject, and there's a lot of areas, and it's a massive form. It's a 16-page form. However, you only have to fill in pages 1 and 2. You take the form to the doctor, The doctor fills it out, and the key part is the year that the disability first started. I always say that the doctor will usually charge for fill out this form. However, keep the receipt because that's a medical expense, and we may be able to use that as a medical expense on your tax return. Don't forget that. Now, the form, usually it's best to give it to your tax person, and I would send in a cover letter with it, just so that CRA knows that there's somebody who supposedly knows what they're doing and sending the letter in. There's a box to tick on the form that says, please adjust all prior years. And in the past, that wasn't there, so our cover letter would say, please adjust all prior years. However, tick the box, and the government is supposed to, adjust all prior years. Now, it's not just a simple thing of applying for it. CRA may just accept the form. However, they may send it back to the doctor and ask for some more information. The doctor sometimes forgets or neglects to respond to the letter. So sometimes you have to follow up with the doctor to make sure it's been done. And it can take months, 6 months or more, in order to get this disability tax credit done. Now, once you apply, CRA gives you either it's indefinite, it goes forever, or they will want a new one. They'll tell you it might be good for 5 years, and then after 5 years, you'll have to submit a new one of these forms. It's sort of the government's way of protecting the Canadian taxpayer as well, taxpayers from abuse, because people want to lie, cheat, and steal, I say. Amazing.
That's right. So what was the credit amount?
So it saves you approximately $1,500 per year that you're eligible for and going into the future as well. But there's other things that go with it too.
You were also talking about the staycation. Can you tell us more about that?
That's another one of my favorite subjects. People, with all the advertising the province did, people still don't know. So every client we're doing this year, we always ask, did you stay in Ontario at a hotel or campground in 2022? This is a special, only 1 year that this tax credit will be allowed. For a single person, it's the maximum you can claim is $1,000. For a couple, it's $2,000, and the tax credit is 20%. So if you spend $2,000 in Ontario at a hotel or campground, then you'll get an actual $400 back on your taxes, or reduce what you owe by the $400.
I didn't hear about it. Yeah, for sure. I thought I used it, but
I didn't know.
So, but you must have a receipt. CRA will, well, they could ask. I don't know if they will or not, but something like this, they usually ask. And the receipt has to show the date you stayed, your name, the hotel's address, and the type of stay, whether it was hotel or campground. But the key is what they call the business number, or HST number, or GST number. Campgrounds have an R number. So that 9-digit number has to be there, because it has to go in the form we fill in, and then the amount that you spent. It's only 2022, and it only stays in Ontario. You have to be an Ontario resident as well in order to get it.
Norman, you shared a lot of valuable information with us today. Is there any final words that you want to talk about?
My experience of doing taxes is, and it really doesn't have much to do with taxes, but when somebody dies, just make sure they have an up-to-date will. So before they die, make sure they have an up-to-date will, that people know where it is, they can find it, preferably not in a bank safety deposit box. Make sure your executors are aware. An executor job is a big job, takes a lot of work. So when you agree to be an executor, be prepared. I've always told executors, when somebody dies, make sure you get 30 copies of the death certificate and 30 copies of the will. People are and then they'll come back a while later and say, thank you, we needed more. Because every time you deal with the government or any agency, banks, you want to sell a car, you're going to need a copy of the death certificate and a copy of the will. CRA does not keep these on file. Every time you deal with them, you've got to send it in. So that's a key to helping people, or helping the executors, because once you're gone, you don't care. But the headaches that are left, Make sure you have a will and it's up to date and the executors know who they are and you've reviewed it as well. There's a couple of other things that we focus on at Horizon Tax. I love to say we look for what's missing. It's easy to do taxes with what's there, but what's missing? I just did a fairly substantial account and I was just going over the numbers and big numbers, and I said, but there was no cell phone. How could somebody? So I emailed the customer and they said, oops, I forgot. So, it was $1,200, save them, $400, like a simple little question. So we look for what's missing. Easy to look for what's there. And the other key to what we do is we talk to CRA on our client's behalf. We prefer the client not to talk to CRA because sometimes they don't know the impact of what they say, whereas we understand the impact. So it's not that we're being careful, or we are being careful, but we're not going to withhold or lie, but we just be careful what we say because we understand the impact.
And you are doing the accounting. You know the answer to everything.
We're careful and we understand the results of what you say.
Yeah.
So that's my final words is make sure you file on time, especially if you owe, unless you want to give them government money. They'll penalize you for being late. And of course, they start dinging you interest from the moment you're late as well. And these are not tax deductible expenses. So make sure you file on time, and always ask questions and talk to your people and share the information that I've given you today.
That's right. Thank you, Norman. So guys, if you would like to know more about what Norman can offer you, please reach out. You will have the contact information with Horizon Tax. I have been personally using his services and I've been extremely happy. And thank you for sharing valuable information with us today.
Norm, thank you. A lot of people associate tax season with several trips to a dentist and for very unpleasant procedures, but you made it sound like there is, for almost any circumstance, there's a silver lining, right? Even if you haven't filed taxes for many, many years, there's still potential for the silver lining. Yeah, there is always something. And things like that come to the surface when you deal with somebody who's a pro. So yeah, I'm going to echo Mitra. Thank you again, and great information, and hopefully you guys found it useful as well.
I'm sure that we are going to have more questions, and you will come back and answering
anytime
all the questions.
But one thing about trips to the dentist, make sure you keep those receipts. It's a medical expense, and also donations. Donation receipts are good for 5 years, by the way. So if you ever find one that you haven't used, or if you don't do a lot, but save them up, because when donations hit more than $200, you get a double the bang for your buck. So medical expenses too, anything that you do to your body, keep track of. Thank you very much.
Thank you. Thank you.
Anytime.
Bye-bye.
Purple Tree Crew, connecting people, building communities, helping clients to build multi-generational wealth through real estate.